Hi, everybody. I'm Diane Brady. I'm here with Nick Romito, who is the co-founder and CEO of VTS. Hello, Nick.
Hi, thanks for having me.
Thank you for coming in. So let's start with what VTS does.
Sure. So VTS is a technology platform really built bespoke for commercial real estate. So office buildings, retail buildings, industrial. We are now moving into multifamily as well. But the genesis of this was a single application for these people who run these buildings to do all the kind of critical things. So that is market available space, run your leasing process, manage your customers who are in that building in a single piece of technology, where historically that was done in 5 systems, which is not efficient. So.
Which I know well from being a renter in New York City. They're not always that efficient. So you have so much data on what's happening in the commercial real estate market. I want to start, well, let's go to the national scale. Let me not be selfish and look at New York City, which has gotten a lot of attention. On a national basis, what are you seeing?
So nationally, what we track, and this is unique to us given what people do in our software today, in terms of the Class A office market, probably north of 70% of it is tracked in our system.
Okay, so, now Class A, just for those who don't know, is that basically the top tier?
Top tier.
Marquee real estate?
Yeah, I would say think about building classes for office specifically as like trophy is the best, right? Those are the new marquee buildings that you hear about that have all the amenities. Class A was kind of the top asset class before trophy. Then you have B and C, which are more commodity buildings.
Right, which I imagine are suffering.
For sure. And so we track about 70+% of the Class A and above, and not too much less than that across everything else. So a lot of the US and North American stock. And so today, and we track it monthly, we have an index called the VTS VOTI, which is the VTS Office Demand Index, which tracks the actual volume of new companies entering the market looking for office space.
Right.
Which is a great kind of forward-looking indicator. So it's monthly. So the last month's numbers, May numbers just came out, and if you look at the top 8 markets in the US, we had about a 13% increase month over month, which feels good. You're like, wow. Yeah. But we're still 13% down from last year, the same month.
Okay.
And we're still almost 50% down from pre-COVID.
And so obviously the devil's in the details there, because that's on a macro basis. Are you seeing, for example, these customers are coming back, but they're looking for less space, so it's basically a smaller footprint? We
are seeing footprint shrink. And it depends on the city, but it could range from 5 to 15% smaller than those requirements maybe 2 years ago. But the interesting data point, I believe, is just the tale of two cities in terms of, if you look at these cities like San Francisco or Seattle or Boston, where they're very tech-centric, the majority of those jobs are still being advertised as remote. Well, as a result of that, those cities are way behind everybody else in terms of demand for office space.
How much behind? I feel like I'm quizzing you in school here, that you're like, okay, just a second, San Francisco was, but is it, if you had to say on average where a place like San Francisco would be from pre-COVID, let's say early 2020, where would it be?
Pre-COVID, SF was probably number 1 or 2 in the country. It was a white hot market. I mean, you couldn't find space. It was crazy. Now they're bottom of the heap. Of the top 8, I think SF, depending on the month, is usually 7 or 8.
Wow.
And so that's a big change, right? That's a massive shift in that entire market.
Now, let me move to New York City, because you mentioned that's not one of the places that is necessarily remote first. If you look at the broad base of industry, that surprises me in itself, because I've heard so much about what's happening in the commercial real estate market here. So drill a little deeper on that.
New York has been a kind of a top performer over the past, kind of through the entire pandemic, but certainly the past year. And most of our larger companies who are looking for space here are in the kind of we call it FIRE tenant base, which is financial, insurance, real estate. Those folks are largely back in the office 3+ days a week.
That's right, because Jamie Dimon and people like that are saying so. You want to work at JP Morgan every day.
I think that shift is going to be more broadly accepted over the next few months.
Why? Now, let me ask. Obviously, there's a whole psychological reason. I'm curious to know what you're doing with your own company, but I would think that you'd be motivated to also save a lot of money by reducing your footprint.
So there's the conundrum of what's better for the business. Maybe increasing productivity of your workers to get more output, or saving some rent.
Mm-hmm.
I think if you do the math, the net is probably productivity, right? If you can outperform or even just perform maybe where you were pre-pandemic, because I do think we've lost a lot of productivity as an economy.
Because we're working from our bedrooms, is that your theory? Or?
Well, I think we didn't know how much productivity we were losing until recently. Now there's actual data on it, whether it's
right.
a Harvard study or some of the other universities are putting things out. But
I know McKinsey just did a study.
I saw that one, yeah.
Where it basically said if we could return to the levels we had, 15 years ago, it would add $10 trillion to U.S. GDP, which is incredible in terms of productivity gains year on year. One of the things you hear Mayor Eric Adams talk about is conversion, because there's been a real shortage of real estate in places like New York City and even San Francisco when it comes to places to live versus places to work. Are you seeing demand for that?
It's definitely the buzzword right now. And we saw this happen in the last recession, right? That was, from, I don't know the exact number of conversions from, 07 to 2012, but there was a lot. And I think we learned a lot too during that time frame. One, it's very expensive to do it. It's not, you can't just take it off and say, you know what, great, cut the center out and let's build apartments. So I think we will see it because we need to. At the same time, it is not as easy as just flipping a switch.
Right.
And so I think time will tell as to how much of that actually converts into conversions versus just conversation.
So when you see the demand patterns, you mentioned North America. Do you have a global perspective as well as to what's happening in some of the other markets around the world? Because they've had a very different approach than we have. Yeah.
And we don't have the data that we have in North America elsewhere, but we do have really good just qualitative data from our customers.
Yep.
And so I would say that it feels to us as though Europe and Asia are in a bit of a different place. Asia, for sure, we hear is back. They're in the office every day. It is maybe not where it was 2 years ago, 3 years, but it's pretty close.
Mm-hmm.
Europe, there are pockets that feel that way, but it's still probably closer to where we are, where it's maybe 2 or 3 days, but it's not 5.
It's interesting. It seems to correlate with labor shortages to some extent, which
probably.
Is if you are worried about keeping talent, you basically let them do what they want.
Yeah.
You're not insisting that they come in. Let's go back, here in terms of your own business again, because there's a lot of discussion around investment possibilities. So people look at this both as tenants, but they also look at it from a REIT perspective.
Yep.
And, so does that completely track when you look at the markets that you think are good investment opportunities? If I'm getting outside your area of expertise, let me know. Would it correlate that places like, New York, for example, would be a better bet than San Francisco?
I think it depends on what your long-term view is.
Yeah.
Right? So if you are looking at buying an asset or repositioning something, that takes time, right? So you really probably have to have a 2 to 3 year view on just what is the future of office if that's the category you're looking at. I think if you look at kind of most investment vehicles today, this is the first time you probably won't see a lot of dollars allocated specifically to office, right? They're really going heavy on multifamily. Industrial is still white hot.
Which you're tracking as well now, aren't you? Multifamily?
We do. Yeah, multifamily. We have our product or our platform is kind of built into 4 pieces. One of those pieces is now growing very quickly in multifamily, which we can talk about. But I would say, for us, it feels like the traditional larger office owners, Brookfield, for example, Blackstone, certainly believe that the office is not going anywhere. And so in some ways it feels
kind
like
of vested interest in believing that.
Yeah, they've got dry powder, they're kind of waiting.
Yeah.
And so, because listen, it's going to be a great vintage for those buildings, right? Whatever you buy now for the next 2 years is going to be a great vintage for you.
If it's Class A and above, I'm guessing,
or
right?
something you can then, modify to get there.
Okay. Sure. So let's talk about multifamily for a second, because, when I hear that category, there's so much talk about sustainability. And we've seen markets, for example, like Phoenix say, we're not going to do any more building here. Are you correlating what's happening with climate change? I'm saying this is, we've got smoke in New York and places like
very
that.
Very smoky outside right now.
But I'm really curious, because some of the fastest growing pockets of the U.S., like the American Southwest, are also extremely climate stressed. And I don't know if that's actually having an impact on demand.
So we don't, it's probably too early for us to tell the impact of that.
Yeah, that's a
on just
very
those-
long-term view, isn't it?
It certainly is, but I think what is interesting to us is just the migration of people over the past 3 years, right? I mean, the black swan event of COVID, I mean, you saw cities grow that haven't grown in 50 years, dramatically.
Lincoln, Nebraska.
I mean, places that just have never seen growth. And so that is going to change a lot, right, of the infrastructure of those cities. Whether you talk about the office market, multifamily, labor, it doesn't matter. It's even just the political landscape is going to change. So it's going to be a fascinating experiment to watch, which I'm excited
So
about.
if I'm a customer of yours, what data do you give me that can help me sort of glean trends and make better decisions? Let's say I'm a business leader, I come to you. What would your advice be in terms of even where I grow and how I develop my footprint, so to speak?
So the interesting thing about commercial real estate is that in terms of where it is in the technology cycle, right, it was probably the biggest laggard. I mean, people literally were using spreadsheets and Excel for everything. And so you had really high horsepower, smart people spending hours a day just writing information down on Post-it notes and typing it into a spreadsheet and not getting anything back. So the kind of V1 of our platform was, let's just get all of your own data into a system
Aggregate.
that you can see of your own, so you know what's happening within your own buildings.
Right.
Because you don't even know that today. And then the idea which we've now come to is once we have enough people managing their own information in our system, we can then help you benchmark to say, here's how you're doing, but now here's how you're doing versus the market.
It sounds like a good use case for AI.
1,000%.
And how are you using AI? I'm not going to use ChatGPT because it's almost like Kleenex and tissue.
Yes.
You know, let's generative AI. Is that something that you think is important strategically for you?
I do. I think right now it is certainly, it is all the hype around every category is around AI. I think we need to be careful in terms of how we deploy it, right? Because there's many ways to deploy a lot of these super modern technologies in industries that aren't ready for it yet, where they don't really see the value because they don't get it. And so our perspective here is, you know, we've gotten our platform to a place where the data is now very standardized and normalized, where you can actually apply AI to it and make sense of it.
Yeah.
So I think we're probably going to start small by just showing people basic information and some predictive analytics on, hey, here's what you can now see. Just even if it's directionally right, is that exciting to you?
Right.
And we'll grow from there. But certainly not boiling the ocean and launching a new AI platform for real estate because it wouldn't get it.
Yeah, there's a lot. It's an area where there's a lot of hype, and there's a lot of people that come up with these startups. You know, I've got a platform to do X,
Right.
Y, X. You've gone the distance. I would be remiss to talk about real estate and not also talk about policy because, you know, on the one hand there's the national level, but it seems like a very city-state almost.
Yeah, it's a local business.
You know, how do you find the regulatory environment has impeded or aided the growth of these different markets we've been talking about?
You know, people don't talk about it enough, but it is so critical to the success of the real estate markets. I mean, look no further than San Francisco, right? That probably plays a part as to why it is at the bottom of the list. The city is not exactly helping that market.
Are you talking about like the
attract new
homeless
companies.
populations?
All of that, yeah. It's a real problem. And, you know, I mean, listen, if it's one thing if you're trying to get people back to the office. If it's not safe to do that, that makes it way harder. And if you look at even Eric Adams in New York, a lot of his supporters was the real estate community, right? So,
Yeah.
you know, I think he's made that a part of just the way that he's going to run office. And I think we're seeing the success in that. And so, I
And
think it's
also
critical.
like where you can develop and where you can't, right?
Totally.
I mean, that's a huge factor. Is there anything else, Nick, in terms of what's on your radar right now that you would put on our radar in terms of what's interesting to you?
Yeah, so I think one thing that we talk about a lot, and it's certainly a massive investment area for us, is if you just sit back for a minute and think about the different iterations of the word workplace over the past, even just 10 years, right? I mean, it has changed so many times in 10 years that I think right now most companies are going through a bit of an identity crisis. So we started out being in the office 5 days a week, right? That was kind of what we did. You then went and this thing called WeWork came out of the ground, which was, hey, there's this idea of flex space where I can go to this other space for 3 hours a day, one day here, and I can, you know, change the size of where I work every day. That was a massive shift. You can argue the valuation and everything else you want.
It was a massive owner of real estate too, wasn't it?
Oh,
yeah.
massive.
Yeah.
I mean, the largest grower of real estate for many years in New York City.
Mm-hmm.
And so that was a massive shift. Then COVID happened. Everybody went home. There is no office space. And now we're going to do a little bit of everything.
Well, I remember Microsoft CEO Satya Nadella calls himself an event organizer. That would seem like you would want a very different type of space if you're coming together and there has to be a certain celebratory event like
and it's an
aspect.
Offsite.
Right.
So you have these iterations, and as a CEO, right, we're a 550 person company.
Mm-hmm.
And so me and my co-founder Ryan spent so much time trying to build a place where culture was really important, where people could be their best self, and they wanted to be there, and that drove productivity.
Mm-hmm.
So trying to do that now over the course of 5 iterations, at home, in an office, in a flex space, from a cafe, is
what
really
does it
hard.
look like? I mean, 'cause it used to be foosball tables and like, oh look, they've got a slide and Legos. I love this place. Hi Google. But what do you think is the optimal use of space in this environment, given the way we work now?
Yeah, so I think now that the word workplace has been totally redefined. I think it is going to be the combination of a few things. I think one, in terms of the office itself, the way that we've been explaining it to our office customers, because pretty much all of them are our customers now, is when someone is leasing from you a 5,000 square foot office, you have to be prepared to give them access to all 5 million of the buildings that you own, 5 million feet.
For best practices? What respect?
Well, so they want to use the amenity space in the building across the street you own. They want to use the gym down the street. They want to use the cafe. So that is now their workplace. So they're signing a lease for 5,000. They're getting 5 million feet. And if you don't give them the technology to bridge that actual experience, they're not coming to your building or your portfolio, because now they're leasing a campus, not a space. And so that is a big shift that's happening, and it's happening very quickly.
It sounds like you have to create a village green with partners then, because nobody can afford 5 million
feet.
Square feet. Yeah, I mean, I'm saying that's either sounds like a terrible customer, or it sounds like a rethinking of how you organize people together and organize customers to make that, the economics of that make sense.
So it depends on the portfolio, right? So in New York City, you have, probably a dozen landlords who all own north of 10 million feet.
That's true.
Right? So and for them, those have all been individual assets. And so now, again, the thinking is you're not leasing individual space, you're leasing your campus.
Right, it's an experience.
Right, because that is now the experience that we're used to. I'm used to having a space for a meeting like this, for an offsite. I want to go and use your amenity center. I don't want to go lease space somewhere else for that. And so that is a pretty big paradigm shift in how we even think about workplace that I think gets us closer to where we want to be versus this, forever flex home 4 days a week thing that's not really working.
I think it feels like a good place to kind of complete the narrative arc of the conversation in terms of, do you foresee a period where we get back to where we were in terms of occupancy rates, or do you think there has to be a fundamental redesign then of the space for that to even be possible in most of these cities?
I think we get back to certainly a 3 to 4 day a week work week. At VTS today, we are 3 days a week. We are building new space. Our sales team's in 4 days a week. And we're actually now hearing...
So those guys got to hustle. I'm the daughter of a salesman, so yes.
That's right. Yeah. But it's funny, we're now actually hearing people, not in our company, but other companies, quit their jobs because there's no one in the office.
Yeah, no, I've heard that.
They want to be
Especially
a part of the
millennials,
culture.
there's nobody to mentor you. You show up and it's empty.
Right, you want to learn. It's hard to learn on a 20-minute Zoom call.
Very true. Very true.
It's very hard.
Well, then that should give you hope that you will be in business for some time.
Let's hope.
Great. Thanks for joining us.
Thanks for having me.